on the dollar index. Let's take a look at USD. So I just want you to notice how USD just does the complete opposite of what happens. So price was running higher. You can see from this high to this low, it's running lower. So let me just do my annotations here. So that buy side liquidity being taken that high. You can see how these two highs are relatively equal. We traded into that and we rejected it, leaving an imbalance right in there. That's a fair value gap that we had. And as we were consolidating last week, we were right within this range. This triangle has got this middle line being the consequent encouragement, and you can see how price just trades to or close to this price line. This is it. And you can see how this trades to consequent encouragement, taking out that high. That's price liquidity being engaged while it's trading in this inefficiency. You can see price starting to reject that, rejects this inside the candle, it breaks lower. And also we've got this BC, it's a BC, sorry. Yeah, this is a buy side inefficiency. It's a fair value gap that we had our target. So like from this fair value gap, when we're trading in this fair value gap, we had this swing low as our target for source of liquidity and potentially fill into this inefficiency. Yeah, so now we've done that and we're expecting price to run higher on US dollar. So we can potentially see price trading to the low end of this fair value gap, using it as support, retesting it. Yeah, I'm just using these terms so that you get the idea. Retesting that and potentially trading into these lows. That's if the dollar index continues as expected. So you can see how today we traded into this inefficiency, and I think we actually got to the midpoint or just fell short of it at consequent encouragement. Did we? We're almost there. Yeah, so like when today opened up, we traded to this inefficiency, we took sales and liquidity, and we traded to consequent encouragement like that. So obviously we're expecting price to trade back to fill the inefficiency and continue to the downside, as we expect the dollar index to keep pushing higher. So if we drop down into smaller time frame, and I just want to take your attention into, this is our 50%, by the way. This is our 50% level of that inefficiency that we had on the daily chart. That's the lower end and that's the upper end of it. So to start with, if you have I'm sure we've got our Asian range somewhere in here. Yeah, we take out the sell side, we just fall short of the buy side of the Asian range. We run lower. While we're trading to, this consequent encouragement of this daily fair value gap, and we run higher, taking out buy side liquidity, filling in this efficiency. We get to that once we get, yeah, so you can see how price trades to that. I think it just, yeah, it trades the low end of it and almost hitting consequent encouragement of that fair value gap. And right at that point, dropping down the 5-minute chart, you can see how we took out this short-term high as buy side liquidity, trades into that, and it starts rejecting it. You can see how aggressive this move was. You're not going to get an entry in there. You're not going to get an entry in there. Then once this forms and you start seeing a rejection, some sort of rejection start going the upside, you're taking your attention from this low to this high. Why this high? You're not expecting price to trade back to this high because you can see how close it got to that consecutive encouragement, feeling the inefficiency almost halfway through, and trading to this 15-minute fair value gap. You can see how it trades just up to that, taking this buy side liquidity. So that's short-term buy side liquidity. If you go in a lower time frame, these highs were sort of relatively equal. Induced sellers into the market, liquidated them, and it traded lower like that. So I'm watching this, and this was during our London session. We're still trading with the idea that the DXY is going to move higher from that inversion fair value gap that we had and to trade back to it later. So like we're still holding a bullish bias on US on the dollar index, and it's going to have a complete opposite impact on this currency pair. That's why we're holding a bearish bias. Yeah, so I also want you to notice the opening price, the midnight opening price, which you had at, which candle is it? This one. The opening price, it opens right there. So I'll just make this purple for you to notice. Yeah, so if we're bearish, we're looking to buy above opening price. If we're bullish, we're looking to buy, let me say that again. If we're bearish, we're looking to buy above, to sell, sorry. If we're bearish, we're looking to sell above opening price, and when we're bullish, we're looking to buy below opening price. Bro, did I just say that right? Yeah, but I think you get it. So once we get this, we've got a market structure shift here. You can see this run takes out that, and also that short and low. That's a market structure shift, but we're expecting more projection, more trading to happen to the downside, filling in this fair value gap, and we're expecting price to trade through it. So if you just anchor out from low to high and use our optimal trade entry. So we're using these optimal trade entry levels on our Fibonacci for the accuracy. Yeah. So we've got three things here. We've got this whole run of candles being our order block. We've got multiple inefficiencies in here. There's like 1, 2, 3 on a 5-minute chart. So like this is one inefficiency on a 15-minute time frame. You should go into a 15-minute time frame and see if this really was one inefficiency. But these are three consecutive 5-minute candles. That makes it a 15-minute candle inefficiency. So you can see our price gets to that, trading to the 61.8%, 70.5%, and 79%, almost reaching it, but like just falling short of it. And what is it trading to? It's trading above the opening price as well. This is an A plus setup. You're getting in right at the end of this OTE level. You're placing your sell position right there, and your stop loss at the high. trade lower, feeling this inefficiency, got some sort of reaction, trading back to the lower end of the OTE level and also above the opening price. This is giving you like another opportunity to go short, to sell again. If you miss this chance to go short, the price is giving you another opportunity right there. It's filling in all the criteria that we have. It's going above the opening price, it's trading back to the OTE levels, and it's also above equilibrium. It's in premium, and that's what we want to see. Price rejects that, leaves this fair value gap. People that are selling in that fair value gap, they get sort of liquidated, and you can see how close we get to this opening price right there. Sort of trades it, and it just rejects that and just goes low, trading into this short-term low, a sell side liquidity, and potentially it had the potential to trade into this pool of liquidity that we had, and that's what I was expecting. And what time is it? This is 12:30. Yeah, it can potentially trade to this. Yeah, so like this was going to be a setup for today. Um, considering considering the dollar index, the higher time frame analysis from the daily to the 15 minute to the 5 minute chart, and just like putting everything together, making it blend and making sense out of everything that's happening. Yeah, so like this is how you can use the dollar index. This is how you're supposed to be using it, because like you're supposed to like know what's happening on the dollar index before you hop onto these these currency pairs and stuff. Yeah, so this was a nice sort of not so much drill down on it. Yeah, it was something accurate that should have used to trade today. Yeah, until next time.